Armed robbery doesn't happen anymore because the criminals, applying their own risk management, determined that there was far less risk in fraud and there's far more money to be made with their fingers on the keyboard of computers than the trigger of a gun.
Hi, and welcome to the Fin Podcast. I'm delighted today to have Martin Woods as our guest. Martin is currently Director of Fraud Investigation Training Limited and has a long history within the AML industry. Martin, welcome. Would you like to maybe just introduce yourself a little bit?
Thanks very much, Nick. I'm introducing myself to the audience, not to you. We go back a long way.
We do.
I've been doing it for 40 years plus as a police officer, detective, MLRO, fraud investigator, private investigator, consultant, working predominantly in the UK, but also internationally. And somebody I think who's known for his passion to try and prevent crime and protect victims and stop the bad guys winning.
And Martin, I mean, this podcast came about because, we were talking a little while ago, and what seemed very salient was the PSR APP fraud regulations that came in literally just about a year ago. And we thought it'd be very interesting to reflect on that and see the genesis of that and what's been happening in the past 12 months. So would you like to give some background around the PSR regulations and why they were introduced and what they mean for the UK?
Okay, so if I give you some of my personal view on that, my background, I am old enough to remember when money laundering was not a crime in the UK. I joined the police in 1983, and the very first money laundering legislation was the Drug Trafficking Offences Act of 1984, which solely related to the laundering of the proceeds of drug trafficking. Then somebody in Parliament had the wisdom to say, what about other crimes? And somebody said, that's a very good idea. Well, then we got the all crime legislation, which was the Criminal Justice Act of 1986, and it's evolved and gone on and so on and so forth. When I left the police service and went to work for ABN AMRO Bank, my first venture into the private sector, and I came into that with a police officer detective mindset, which was pretty black and white, really, because I was accustomed to black ink on white paper, which was law and regulation. And I said to many senior people, look, if we do not put the right AML controls in place here, somebody could go to prison. And eventually, one of the senior managers said one day, I wish one of you would effing go to prison. And I was somewhat shocked and startled. I said, how so? It's because then, Martin, people would listen to you. So fast forward to October the 7th, 2024, and the new legislation coming in. Nobody had been to prison really. Nobody's ever been to prison in this industry for failing to implement AML controls, right? So he was quite right. But suddenly, this new legislation impacts profit and loss, and therefore it makes people listen. And I think as the legislation, the regulator, the payment systems regulator said consistently and constantly, the word was incentivise, incentivises, or incentivise. They used it time and time and time again, and it happened. So I don't know what the motivation is. Fraud is out of control, and it was before 2024. But let's give the banks some credit. Even before that, the banks stopped 66% of all bank fraud. But the fraud is going up and up and up. So 34% that gets through. But the 50-50 reimbursement came about because there's a lot of fraud and public sector money isn't great. And personally, I think the government have outsourced payment fraud, authorised push payment fraud in its entirety to the industry. I don't think enough people in the industry realise what that means.
So do you think we still haven't seen really the full ramifications of what this means? I mean, I do remember you saying a little while ago about likening it to a casino for fraudsters and everything being red, i.e. they can, I think you said, double their money through these regulations. And it seems that the regulations may incentivize criminals to be reimbursed and sort of push fraud in some respects. But do you think is that not the case, do you think, over the last 12 months and going forward?
I think some criminals will have moved to what you just described as what's called first-party fraud. And I always had concerns about this because before this new legislation came in October last year, if you or I were fraudsters, we have a number of obstacles to scale. The first one is to find an account with some money in it. Secondly, to get the communications details for the account holder. Third, to then embark upon a charm campaign or an intimidation campaign to cause that customer to move their money into another account we control, and hopefully the payment service provider where that account is held doesn't alert it, and behold, I've committed a fraud, laundered money, I got away with it. So I needed somebody else's money. Post last year, I don't need that account. I just need my own money. If I put my own money into an account, move it around, play around a little bit, and then I send it to my good friend Nick, and 2 days later or a week later, I say, I've been defrauded. That Nick's already a bad man, right? And if nobody's checking out what's the relationship between Nick and Martin, you're not going to discover the first-party fraud. Ergo, the fraud is successful. And what that also then encourages, okay, let's do it again. If you were in a casino and one of the tables was all red, no black, no green, no even, no odd, and you put your money on red, it comes up red, you double your money, would you go back to that casino tomorrow night?
I think you would, wouldn't you?
Well, that's my fears about first-party fraud, is I don't think there's enough attention paid to possibility that any transaction is first-party fraud. And I do respect this. Most of these frauds are lower value retail fraud. And on a triage process, no organisation should be looking to investigate at any level all of these low-value ones. But when it gets to a higher value, I think there's a need for investigations, particularly if Bank A says to payment service provider B, you owe us 50% of that £45,000 because it was fraud. Now, if I'm being asked to pay them £22,500, I might say, you didn't ask me for a single piece of KYC information. You didn't ask me for any transaction information. Did you investigate this? Because you want me to give you £22,500. I'm compelled to, but surely you did some kind of investigation. And I don't know if there's enough of that going on.
So that's a really interesting point. You talk about the low versus high value, typologies that are going on and where attention's being focused. So do you think with the lower value, we are seeing an increase in maybe mule accounts? Maybe the cost of living crisis is having an impact in terms of more participants, willing or unwilling within scams and frauds?
I read today something about people are willingly selling their identity data to others and who are then using it to facilitate frauds and for mule accounts. I don't always see it as a mule account. I don't think there's enough consideration of, is it a victim of impersonation rather than a mule? So I think a mule is somebody who allows another party to control their account. But if I know nothing about it, I'm not a mule. I'm a victim of impersonation. Yeah. And if you're the bad guy, Nick, sorry if we keep referencing you as a bad guy in this, then you have control of it. And it's nothing to do with a mule. It's just an account you control. You've used a false name to open that account. And sometimes people may see it as a semantic, but I do think it needs more attention. To just label everything as a mule, I don't think it's the right way about it.
I mean, we've talked about this for a long time. We've traditionally had fraud and AML as being quite separate departments, and never the twain shall meet. And yet, in many respects, fraud becomes a Proceeds of Crime Act. Therefore, it should be investigated from an AML perspective. Are you seeing more merging? I mean, I think we would term it FRAML in the past, the bringing together of fraud and AML. Is that becoming more of a reality now in the industry in order to have this almost real-time decisioning and determination of higher risk transactions, do you think?
I don't know if anybody else has coined this, but I've invented something called second-party fraud, because I think what the PSR 50 reimbursement law has done, it has made the payment service providers, the banks, the EMIs, the second-party victims of the fraud, because after all, they're going to reimburse the victim, right? Ergo, if I hold a laundering account, whilst I'm looking at money laundering, actually what I'm looking at is fraud now, because I'm going to have to pay 50% of that back because somebody's been defrauded. And therefore, me and my shareholders, we've become the second-party victim of the fraud. So the quicker we realise that money laundering, the laundering the proceeds of APP fraud is fraud, right? You are a second-party victim of fraud. And that's why the industry, and many are doing it, because it's not just a Martin Woods show this, but many are doing it. Others need to catch up very quickly and see that you're looking at fraud. And to what you said, Nick, the industry needs to think about, if we've been stopping 66% of fraud, very well done, means we're good at fraud control, right? We've not been stopping 66% of money laundering, right? That's not an area of our strength. We need to bring across now expediently that fraud control environment, that fraud control thinking, the fraud red flag triggers, and expediently identify the money laundering. If we're slow to it, we're going to lose far more money.
And I'm just, what made me think then around some of the traditional, because I come from an AML background and not necessarily fraud, but within AML, I mean, what we've talked about for a long time about how to be effective in AML are things like, not just the hard controls of technology and real time and data, but things like culture. as well. And are there similarities you think from the AML world that we can bring to the fraud world to make them more effective? It's about how we address that percentage that they're not catching at the moment, and better protect, ultimately the second party fraud victims, i.e. the shareholders of the financial institutions.
I do think the P&L thing changes culture. So because previously it didn't, I'm complying with it, I'm trying, I'm doing my best. It doesn't matter if I fail. Nobody's going to go to jail. And it's actually, I'm not going to throw too much more of my shareholders' money at that. But now it does impact your P&L. We said as well, the PSR league tables, the information they provide to everybody, consumers, regulators, and everybody in the industry, tells us what's taking place to a degree, and it gives consumers information to say, that's a good place. So pre the 50/50 reimbursement, the league table said Nationwide and TSB reimburse more losses than anybody else. So if you're going to open a new account, that's probably the place to do it. It's a really good advert for those two. But post the 50/50 reimbursement of last year, I'd think TSB and Nationwide are in the money, not out the money, because they were reimbursing 100%. Now they're getting 50% of it back.
I mean, how can smaller firms kind of catch up then in terms of addressing this for their bottom line, their P&L, and ensuring they're not being bled dry through this process? I mean, we talked a little bit about maybe culture and strategy. Is there aspects of training that we can apply across the board here for a more joined up approach to how we actually, identify and manage effectively these sorts of inbound and outbound transactions?
These newer companies, the challenges, what they have they have rich data. They have data like we've never had before, right? And that data, if we use it wisely and properly, which we've been doing for a protracted period of time in the fraud prevention context, if we now move some of that thinking to the AML prevention context, I think we'll become better, smarter. If my customer is Green Plant Limited and I'm paid money by Glass of Water Limited, I know Green Plant Limited as my customer. If I'm looking at this and saying this might be fraud, and you do this, Peter, I do it very, very well, and others in the industry, they're quite good at giving a probability of, is that transaction likely to be fraud? And actually, I think there's so much public domain data available on Glass of Water Limited that we could extract very quickly, correlate it with what we've got, and give a probability impact expediently. Is this likely to be fraud? And therefore, are we likely to be laundering money, and it's going to cost us 50%? Do we block? And, if you've got that model in place, a firm might say, we'll block at anything above 50%. Others will say, I'll go at 75%. Some might say, I'm going to 33% because I can't afford to lose the money. But it's that use of data. And the second piece was, well, we spoke about, I really want to work with the industry to say, and it is a kind of shameless self-promotion, really, of self-indulgence of what's in here, right? So inside my head is 40 years of investigating crime, right? Inside, more recently, 3 years working in retail. And actually, I would like to work with a firm that takes that and makes a bot out of it, is essentially. And when the transaction monitoring alert is generated, can you then replicate what I would do, both with Green Plant Limited and Glass of Water Limited, to say, is this likely to be fraud? And if they're both new companies, they've both got no website, they're both at residential addresses, right? And they're both owned by Polish people, and it's a round figure sum of X, and they've both got the same SIC code. Now, here's the really tricky one. There's no website, there's no operating address at commercial premises. They're both at residential premises, 100 miles apart. How did they ever find each other? Now you tell me, what's the likelihood of that being fraud?
It does sound very high, doesn't it?
But it's easy to find as well, isn't it? Do you understand how easy was that to find it and actually say, what is it makes you think that's fraud, Martin? Because, I'm going to do it that way. And then the other thing, if your customer hasn't paid for an insurance policy, is that part of KYC? Well, KYC can be anything you want. And actually, it's an interesting thing in the industry. So we have this letter yesterday that goes into the government saying, can you please do more to help us prevent fraud? Well, okay, but, maybe we could do more, because I don't know how we allow businesses to have accounts with us without insurance. How does somebody fix a roof, go on a roof, without insurance?
Well, insurance runs everything, doesn't it? So, it seems unlikely.
It's such a critical piece of my KYC in helping make is this likely to be fraud? It's that likelihood increases significantly when I can't see the insurance. Now, your customer can send you an insurance certificate. You might need more than that. What you really need evidence of is payment for that insurance policy. Because you can come out the insurance policy 3 days later and say, I don't want it anymore. Get your money back. And you've paid it somewhere else. I want to see that you've paid for it. And if it's not being paid for by out of my account, out of your account, but I've got a piece of paper that says you're insured, are you? So I'm just saying, part of that to me is I understand why we're asking the government for help, but I do think as an industry we can do more and we should do more.
And at the very least, we could put some roadblocks in the payment process and slow it down. At least, have the opportunity to do more due diligence around the firms or the parties that are transacting before we actually authorise anything. And that then leads on to having a much more effective risk-based approach to how we deploy our controls and our resources.
Yeah, in our industry, where we need to get better as financial crime professionals is engaging with our customer service and customer contact people, saying, here's how we explain to customers why we blocked their account. And to give you some context and even an analogy around that, if I was a police officer in uniform or a detective and I stopped you in a residential area and you're very frustrated at why would this policeman have the indignation to stop me? And I'd say to you, well, Nick, there's been a burglary. And you might say, do I look like an effing burglar? I said, Nick, what does a burglar look like? I said, I'm not saying that, Nick. I said, I'm saying there's been a burglary. Well, I didn't do it. I said, so why are you stopping me? I said, well, do you live around here? I said, yeah, I live there. I said, well, Nick, the burglary happened 7 doors away from where you live. So? Well, Nick, if I don't investigate it properly, there's an increased likelihood you will get burgled next week. So why are we not then therefore explaining better to customers from a financial crime context of why what we're doing in blocking some transactions is important and it's good, right? And I don't think we've done that education piece with our customer contact service points. What I would say, if they're a criminal, of course they're irate, because if you see crime as a job, and it is, and if you take fraud as an example, and all those obstacles and hurdles I explained to you earlier on, and it's quite satisfying from my perspective as somebody who likes to protect victims and frustrate bad guys. If I trip them up 10 metres from the finishing line of a 1,500 metres race and they don't finish, of course they're irate. And they're going to express their irritation. But we took him on in the first place as a criminal. Maybe our KYC failed in that sense, but we're not perfect, right? But yes, criminals will give you a bad trust pilot. What do you want to do? Send them a box of chocolates and say, sorry about we stopped you. I stopped the guy on Christmas Eve getting his money. And actually, I'm sure there were some empathetic people who thought, look, can we not just let him have it? I said, fine, that's a crime. It's called laundering the proceeds of crime. And even I've got sympathy for his kids who aren't going to get presents. God knows what they're going to eat tomorrow. But it doesn't mean he can have the proceeds of that crime. Imagine how irate that guy was, because crime is a job. Crime is work. And actually the fruits of their labour is what we've got. Believe me, ladies and gents, what we do in terms of financial crime and anti-money laundering, it hurts them like hell. So they're going to give you a bad trust pilot for that.
That's really interesting. The concept of having a trust pilot for this, as part of the overall risk score as well. I think that's a very interesting concept.
It'd be nice to say if we could reply, said, he's a criminal who is convicted of this and convicted of that, so ignore him, right? Yeah. We're good. And actually, maybe that's, I don't know. I'm not really, I'm not really into Trustpilot. I don't do Facebook. I'm 60 years old. I'm not the greatest social media animal around, but I do wonder if there's a lack at times of a right to reply to some Trustpilots.
I certainly like the idea of being able to use technology, against them, because we're always on the back foot in terms of they can adopt technology far quicker than the, financial institutions can really respond and implement and go through governance.
Is it technology or is it data? So what technology changes are they making? I mean, is it a new social media platform which is just a vehicle for data? Because I don't mean that to confront you and challenge you, but I think it's all about the data. I don't see. I mean, their primary tool for a fraudster is a computer, and a mobile phone is a handheld computer. Agreed?
Yeah.
Right. It's always a computer. And you may have heard me say many, many times in the criminal landscape, ladies and gents, we haven't read about anybody holding up a bank with a gun or a cash in transit vehicle with a gun for decades, right? Armed robbery doesn't happen anymore because the criminals, applying their own risk management, determined that there was far less risk in fraud and there's far more money to be made with their fingers on the keyboard of computers than the trigger of a gun, right? So they've changed the way they do it, right? And the technology for a protracted period of time, the computer, has allowed them to be multiple people in multiple places at different times in an almost zero risk environment.
Well, let's go back to the league tables around the PSR are publishing and what that means for banks in those league tables. And have we seen any tangible regulatory response from the likes of the FCA over those league tables?
I'm glad you mentioned it. So the league tables of PSR's most recent publications, they reference that 88% of victims are being reimbursed within 5 days, right? And there's only 3% of claims being rejected for fraud. So the victims aren't losing the money anymore. Where's the money coming from? It's coming from the industry. So the industry's hemorrhaging money to fraud, hence second-party victims of fraud. And also the league tables, they're showing which firms have a propensity to launder more of the proceeds of AP-free fraud than others. And you know, people can look it up. I'm not here to name and shame, but there is one particular firm that's a long way in front of everybody else. The FCA has a duty to protect consumers. There's a piece of information that says the criminals, because this the only way to read this, the criminals have identified that that particular firm is a really good place to open accounts to launder the proceeds of APP fraud.
It certainly can be read that way, yes.
That is another way of reading it, right?
Yeah.
Right. And therefore, I think the regulators are compelled to take action and you know, probably request a skilled persons report, a 166 as it's called. And I was at an event recently where we were discussing 166 reports, and somebody who's very senior, very knowledgeable and well connected said the FCA has recently started to issue 166 reports, skilled person reports, in relation to fraud controls. And that's logical.
And that's a big change because typically, if I understand it, you know, Section 166s were primarily for AML. And then I guess the implications for that, then, those are expensive investigation and reports and remediation work. So that's going to have an even bigger drag then on the P&L of banks that are subject to FCA scrutiny.
If you're a very small firm, it'll put you out of business.
Wow. Okay, that's something to.
But if you're laundering that much money, can I just say you should be out of business?
True. Are they? And do you? Yeah, it's interesting. I mean, are they aware of this, or is it cost of doing business?
Who aware? Who? The firm or the FCA?
Well, I would say that I would say the firm initially. Are they aware of the scale of the problems? Are they turning a blind eye, or do you think in some?
Well, given that I have to report the data, right?
Then that it is transparent.
And actually, what's happening is on all sides of this, all these banks are sending them a report, information. Yesterday, my customer was victim of fraud, and money went to you. The money went to you, and money went to you. You know, so they are aware of it, right?
Yeah.
What does it mean? Pre the 50-50 reimbursement, it might have meant that, they got really bad controls that let that money out. And there was a blame game maybe, right? What the PSR 50-50 said, and it's interesting, said the industry made a mistake here. The industry's at fault. And if we've spoken before about the law firm CEL, who constantly advertise to victims of fraud saying, we can help you. And one of their lines is, the industry let you down. Given now that we're paying all the money to the industry now paying all the money to the victims of fraud, if we do not improve our collaboration and investigation, we are letting ourselves down, and we're letting our shareholders down. And I ask people, what are we doing? Are we just sitting there and letting it happen? What is your individual firm strategy to reduce potential losses from laundering the proceeds of APP fraud and that risk? What's your strategy around that? Because when we said about the scam, the massive risk is this investment. If you have a customer with the word investment, we're still global investments in their name. Please, please, please do take action. Look at that. If it's not regulated, what are they doing? Right now, some are, and I saw it many times, are operating their own portfolio of investments in properties. That being the case, you can monitor for that. Where's the money coming from? Are they engaged with lawyers, et cetera, et cetera? If it's coming from third parties, that doesn't look like it's their own investment, does it? Because if you're on the wrong end of an investment fraud, and the wrong end is you run the account where all the people are paying their money into, you're on the hook for far more than £42,450, which is 50% of 85,000. You're on the hook for that for every customer that paid money into your laundering account. That investment account, can put you out of business, and therefore your thinking has to be: what are the key words? And the words are also opportunities. Money should be a high risk word. Payments is a high risk word. Coin, whiskey investments, right? So there's certain words that I think, and even, and I'm sure you do it, and this is not something for your brand and your company in particular, I'm sure the entire transaction monitoring industry does it. recommends to customers there's certain words you should be looking for to protect you, your shareholders and customers. And they would include whiskey, they would include investments. And if you're not doing that, folks, here's what happens. I am a criminal fraudster, which I'm not, but if I was, I need to find you to help me to achieve my business because you're not looking for me. And that's a really not, as a fraudster trying to launder money, that's a great relationship for me. Thank you very much. And maybe they found that with the company that's at the top of the PSR league table.
Yeah, that's interesting. And I think it really plays to your point about data as well. And making sure that, we've got plenty of data scientists. I think sometimes the gap may be that we don't have the domain expertise within maybe more of a stovepiped, data science environment. And we've talked a bit about training and culture. And, do you see that as being an opportunity to cross-train the data science guys to be specifically looking for these sorts of typologies from investigations?
Collaborate with them for sure.
Yeah.
And actually, so I'm not a data guy. I'm not the IT guy. I'm an experienced fraud and AML investigator. I've met money launderers, I've met fraudsters, I've met victims, right? I've looked at accounts, I've seen how these operate globally, internationally. I've looked at border and frauds, and I've looked at very much, particularly recently, domestic frauds in the UK. And I think it's a combination of these factors. And I wrote a paper on it years ago. It was called A New Era of Transaction Monitoring. And the E stood for emotional intelligence. You and me, passion, right? It's what we want to do. We want to make an impact, make a difference. R was for real intelligence, real AML, real fraud, real crime. And the A was for artificial. And the artificial came from the data scientists. But if you haven't got the three together, you haven't got the best outcome. Because if I yearn for the fact that I can work with you and say, well, here's what I'm looking for and why, and you can find it for me. And then we bring these things together and you say, why would you want that? Because it means it's indicative of this, that, and the other. And also, if we go back to the PSR league table, and generally speaking anyway, if I'm a fraudster and I've found a company, a payment service provider where I can open current accounts expediently and I'm getting my fraud money through, I'm going to recommend that to my friends. I'm going to open more accounts there. And it's logical that that's how these companies will come to the top of the table because I think their controls at KYC and onboarding might be deficient. The point I'm trying to make here is seldom do you find a solitary, isolated account in your firm. They will commonly be connected to other accounts which are yet to be used for money laundering. But my instinct tells me close them before they are used for money laundering. And this is a data part of it. There's so much data. The phone connects. And the FCA have referenced this. If you've got multiple accounts on the same phone, that's an issue. They've talked about virtual addresses. There's a conversation around that. What is a virtual address, right? Let's combine it with accommodation addresses as well. And then, there are 4 or 5 big ones in the UK where there are over 100,000 companies at each of those addresses. If you're not familiar with them, it's easy to pick out. The postman's got a really bad back, right?
Yeah, there's a famous one, Holborn somewhere, isn't there?
I can name them. I don't really have to because people are aware of them, right? But if you have companies registered at those addresses, and this is something people aren't picking up on, the money laundering regulations compel you to identify where they operate from.
Yeah.
They cannot and do not operate from that registered address. Therefore, where do they operate from? And you have to verify it. And so many firms are failing to do that. Now, the basics of our business for fraud prevention, for money laundering prevention is, are they who they say they are? Tick. Are they where they say they are? And they cannot be at a virtual / accommodation address. So where are they? And then do they do what they say they do? And a lot of this comes down to, when I was a police officer and I served a court order upon you, I expected you to answer those questions.
I think, what's interesting, I think there is a huge opportunity then for, for advanced technologies and Gen AI and machine learning and all of those tools to use data much more efficiently, more effectively. I think there is an opportunity for firms to get ahead of this if they've got the appetite to do it. And I guess the compelling reason. I mean, off camera, we were also talking a bit about the implications of insurance policies, which I wasn't aware of, Martin, and for reimbursing APP fraud for financial institutions, PSPs. Would you like to just touch on that?
Yeah, I met with a broker and they were writing policies. They were looking to write policies to sell to firms to say, we'll insure you against APP fraud losses. And they were looking at, expensive policies that would insure for up to 1 million. And the cost of that might be 80, 100,000. it's a risk control, right? So the further you are up the league table, the more you're going to pay for that, right? If you're laundering more money. But you'll have an excess maybe of 200,000. So keeping it to round simple figures for a round simple bloke. 100,000 for the policy, 200,000 excess. Therefore, for your 100,000, you're insured for 800,000. Because once you exceed the million, you need a new policy because you're only insured for the million. Now, if you've got that investment account I was talking to you about, you could do that in one account if you haven't managed your KYC properly. Now you need a new policy. And I've got some news for you. It's going to cost you a lot more than 100,000 because your risk has just gone through the roof. But what I kind of was appetized by them, we're all familiar with insurance, right? It's ugly stuff until you need it. And if you've got the right policy, then it's beautiful, right? It's like saving you. But it won't be effective. You won't be able to have a valid claim if you don't meet the terms and conditions of the policy. And the terms and conditions of those policies for insuring against APP fraud, I would imagine your firm is fully compliant with applicable laws and regulations, which means your due diligence is good. You have identified and verified the address where they operate from, and you've asked them, what are you going to use this account for? These are just things that the FCA call out every time they serve. Every time a final notice is published, these things always come out. If I was in the FCA, and don't be alarmed, people, that's never going to happen, right? For many reasons, right? And including the FCA are not going to let me in, right? But I'd be saying, where is my credibility as an organisation if this keeps happening? Are people ignoring me? Where's the consequence for people? If I've said in the last 3, 4, 5, 6 final notices, firms are not collecting information about the intended nature and purpose of the account or verifying the operating addresses, and they're still not doing it, why is that? Well, that's something the regulator may want to question and say, what action do we need to take differently now to make sure they are doing that? Because that's a massive contribution to laundering and fraud losses. If it wasn't, why is it in the law?
So, Martin, this has been a fantastic discussion and really appreciate your insights and time. What would you see as being maybe, the top 3 controls or outcomes that financial institutions should look to address this going forward?
Definitely on the KYC, make sure you get the right information. And maybe just as innovative, expand upon, if you're already doing some of it, but if you're not doing any of it, give customers more right to control how their accounts are used. Today, my accountant is incorporating my company, Fraud Investigation Training Limited. If the bank I open the account with would say to me, what do you want to put controls in? I'll never pay money overseas. It's UK domestic. I'll never want more than £300 to go out of that account between the hours of 6 p.m. and 8 a.m. because I might be out, might buy dinner, but no, I'm not doing any business at that time of the day, right? So give me the right to control it. Contextually, I helped a guy who'd been a victim of fraud. He'd been to a black tie event in London, been drugged, face print. He was paying a hairdresser £5,000 at 5 a.m. on a Sunday morning and a car mechanic. And I said to my friend, because I hadn't met the guy, I said, please tell me he's bald. Anyway, he got all his money back. But I do think that's an area where we could do more. And then the aggregation of data. There's so much data within firms that, please think outside the box, go beyond the spot position. If you've got a bad account, I promise you there's an increased likelihood you've got connected bad accounts. And the best thing you'll do is prevent them ever being used. And then you'll become an organisation where there is too much resistance and they'll go somewhere else.